Good morning, everybody, and welcome to the Daily Energy Markets podcast. It is 10:30 UAE time, and it is the last day of November 2023. Time is flying. Brent crude oil looks like it's also kind of flying. Having dipped below $80 a barrel at the end of last week, we're now above $83 a barrel. This is a very unusual day. Perhaps won't be repeated. I don't know. Hopefully not. A trilemma of sorts. A trilemma, which is the big sort of well-used phrase here in Dubai with the arrival of COP. But the trilemma that we're facing today, of course, is the start of COP, an OPEC meeting, and Israel restarting its war in Gaza. Of that trilemma, Jorge, what is the oil market rallying on over recent sessions? What's the biggest impact of these three big events regarding the energy markets?
It is again the monetary policy in the US.
And I didn't even mention that. There you go.
It was very clear, say a couple of weeks ago, that there was a lot of market fear over continuing high interest rates. And oil prices tend to be an inverse of those concerns because they impact global oil consumption. And we have seen economies such as China, not performing their best. And that translates into a soft oil price. But the hawkish stance by the Fed has been moderated somewhat over the past week. And this means that there is the distinct possibility of monetary creation as we enter the new year. And if inflation is not being fought as hard as it was, then interest rates will soften. But because the US economy has such large deficit, it will need to finance it a different way. And the different way remaining is to print or to create money, essentially. And as you create more money, then this translates into higher oil prices. What this means to say, really, for us in the oil market is we have seen a decline to, I know it went below 80, but call it 80 on concerns of high interest rates. And now we're moving up a little bit. And if there is a lot of money creation, then we'll see plus 90 for sure. And we will have this whipsaw in Q1. I indicated in your previous kind of invitation in this forum that probably we would see monetary creation April onwards as we head into the election period.
Let's welcome to the table Rachel Ziemba. Good morning, Rachel, or good evening. I'm not sure what it is where you are.
It's morning.
Morning. Okay, we'll take morning. Rachel, we've just picking up on the comments there by Jorge. We do have a note of caution. We still have the one of the members of the Fed saying not too fast. There's still potentially possibilities for the need to rate hikes are still on the table if inflation doesn't continue to ease. Is that just sort of blowing in the wind now as the markets moved on from that? Your thoughts on the continued sort of macro tightness and its relevance for the markets and inevitably the other three trilemmas I mentioned on entry?
Sure. Thanks, Sean. Thanks for having me. Good to be here with Iman and Jorge. So I think on this, and I'll throw in another thing I'm watching today, which is November 30 is also end of the month, more clarity on what the US is going to do on the Venezuela sort of sanctions relief. And we can come back to that. I know we've talked about this on the podcast as well. But on the topic of the Fed, so I mean, I think, again, this view that Jorge just laid out, this sort of story of the Fed being close to done, that is contingent on inflation, sort of inflation easing, inflation moderating, maybe the Fed being comfortable with, this a slightly sort of, higher pace. So I think it is data dependent. Now, of course, when we look across the things, there does seem to be this easing. We look at Black Friday, consumers were buying, but they hadn't been ahead of that. And more people bought on credit, right? Buy now, pay later. The US consumer is not doing quite as well as it was. So I do think things are softening. I'm probably a little less maybe optimistic or pessimistic than Jorge, depending on your perspective. I think it might take longer for the Fed to, sort of start easing. I think this might be well into the sort of new year. But what I do think has been starting to happen is this tightening in financial conditions that was going even further than the Fed expected. Sort of credit conditions tightening that has started to ease off. One part of that, and it's a linked part, is the energy side, right? What Americans are paying to fill their cars up has gotten cheaper, which of course then leads us to this big question of what OPEC is going to do, because the prices we've been seeing the last kind of couple of days, couple of weeks have not been super comfortable for Saudi Arabia and for the big OPEC producers. But it's hard for them to cut more, and it's hard to sort of send those messages. And I'm still quite worried about the credit conditions in China and Chinese policy. And then if anything, maybe they're helping put a floor in the property issues, but the sort of consumption push, the rebalancing, we're not seeing that. So I think this is a global growth story that's okay, but not fantastic. And I think that makes it tough for sending these messages about fossil fuel consumption going ahead, but also trying to think through in this higher interest rate environment, what's the return for some of the new renewable projects. And so that's all the backdrop as we kick off the COP today.
Dr. Aman Nasseri, Managing Director, Middle East at FGE Dubai. Dr. Aman, we since this OPEC Plus meeting didn't happen a few days ago, last weekend, oil prices have continued to rise. I'm wondering, maybe they shouldn't meet for another week. Obviously they've been meeting virtually, and what we're going to get is not a meeting, but an announcement. So ultimately we've been in an OPEC meeting for a number of days now. Your thoughts on the rise in price as this meeting drags on closer to the announcement, which apparently is due today. Your thoughts on all things that OPEC Plus are considering?
Sure. Yeah, related to this question and your first comment about price increases, I wanted to say that we were just below 80. Now we're above 83. This $2-3 movement in prices, if you look at the chart, we have had a lot of these over the past 2 weeks and a bit higher over the past month. Just about a month ago, we're around 90. So this $2-3 is certainly a very nowadays market that got used to these kind of fluctuations, responding to messages. As you rightly mentioned, over the past week, what has been lots of speculations, lots of announcements, official and unofficial announcements, leakage from certain countries, members of OPEC, and everyone has been looking at performance of these countries. How does that fit into the current set of proposed kind of quotas next year, and been busy speculating about multiple outcomes. And when we look at things, there is clearly 3 paths ahead of us, and the key, later today we may know, but we may also not. And we have seen complicated OPEC meetings that took more than a few hours, more than a few days sometimes. And this could turn out to be one of those, depending on how the member countries that are subject to the quota change, reference level change, as well as any proposal that may be brought to table by the Saudi delegation as the leader and the forerunner of these supply cut adjustments, but also perhaps other member countries as well. So the scenarios that I see, and what we may hear in a few hours or a day is that there's no consensus then whatsoever, and it falls apart. We may see Saudi in response saying that, okay, voluntary cuts are out if we can't agree on not unilaterally, and that's a major blow, a big kind of,
That
again,
certainly would
price
be.
war.
Let's get Jorge's view on that. Jorge, OPEC plus decision, clearly this meeting that's been dragging on now virtually for probably close to a week or more, given that it was meant to be last weekend. So you imagine the week before that they were trying to line up their ducks. They were unable. So we're kind of deep into a second week of this meeting. I'm wondering your thoughts on what the stumbling blocks are, what your expectations for the decision that they will come to supposedly today.
Well, it is obvious from the oil price performance and obvious from a fundamental point of view by the inclusion of Venezuela and rising production in Guyana, and Iran is doing well, all these things, and with China slowing down, that OPEC has met to cut an additional 500 to a million. It is clear by the extent of the meeting that they are having a hard time agreeing on the cut. But it is also clear that the meeting keeps on going. So they're really working hard to get there. So I think politically and fundamentally, it's very hard for them to come out of the meeting and say, we have agreed not to do anything. So if they do that, the market will perhaps not crash, but have a swoon.
If we take it at face value, the reporting that the reporting is that Saudi Arabia is trying to convince the African countries to follow through with the arrangement from earlier this year that if you don't meet your production quotas, you're going to have to reduce to the level that you can actually produce at. Is that a big sell? Is that a hard sell for the Africans to take on board? I mean, it's just a matter of taking on board a reality. Is that a difficult sell for Saudi?
It is extremely difficult because over time, African nations and most oil producers, they just do what they have to do, which is they sell as much as they can and they carry on and they endorse actions, but they don't participate. At the end of the day, OPEC has to be a grown-up, really a grown-up, to see that there are only a few members that can make a difference. Of course, the first one is Saudi Arabia, the second one is the UAE, the third one is Kuwait, and the far distance in a different grouping is Russia. So my hat in the ring today is that they will come out with something positive. It will be a little fluffy. It won't be so decisive on another million. It'll be maybe 500,000, but they have to come out with something. If they don't, short sell this thing, right? And but they will have to come out with something, and the sooner the better. So all the indicators are there that they're working hard to have that positive resolution on a cut.
Rachel, just looking at the other big story today, and obviously for the last 2 months, the terrible events of Israel's bombardment of Gaza resuming today. How big an issue is that? Obviously, within the context of U.S. geopolitical posture and U.S. energy geopolitics, is there an intersection point? Is there a consequence for Biden?
I think there is a consequence for Biden. The electoral math, is hard to dwell, sort of put together here. But I mean, I think the response from Arab Americans feeling that he really should have done more on the humanitarian pause and earlier, that wish that the U.S. would condition, and then others, even centrists, progressives who think they should be conditioning aid to Israel. And I think Biden's really been on the record wanting this sort of current pause to extend. Just as we were coming on air, I saw some different views that maybe the truce had been extended one more day with another round of hostages. I'm not quite sure if that was confirmed. I think on the energy side, the impacts are not as clear to me. I think where the U.S. electoral politics kind of comes together is this desire from the administration to be tougher on Iran. There is a view in Washington that has linked Iran to the Hamas attacks, even though, and Iran has definitely been supportive of Hamas, but they've gone out of their way to sort of say that they weren't involved in this operational consideration. But still, the view in Washington is, why has Iran been allowed to produce more oil, especially in Congress? And the view is, why should they be allowed to have their own money for sort of past? And so
why should they be allowed to exist?
Yeah. So I mean, again, I'm parroting things. It's sort of not my view. But we saw yesterday, just a few, I guess, 12 hours or so ago, the first sanctions that in any way touched Iran's energy market that we've seen in the last few months. Now, I think some of this is an attempt to show that they're doing something. It's getting rid of shell companies, many of which are in the UAE. And what I noted in that, and so I'm not sure they'll have a meaningful effect on clawing back any production. But I do think this new enforcement probably means that it's going to be even harder for Iran to add more production to the market. So, and that would have been difficult anyways.
Let's get Dr. Mann's view on that. I mean, ultimately, one of the things that OPEC Plus are dealing with as they try and bring certain members into, quote, a reality, there is the reality of other members who aren't part of this agreement, like Iran and Libya and Venezuela, adding more barrels this year. But on the Iran question, Dr. Mann, with this sort of resurgence of supposedly tightening of sanctions against Russia and also supposedly on Iran, would that succeed given Iran's sort of 100% exports to China? Is there an argument here that the U.S. can still contain Iranian exports?
Yeah, I'm totally with Rachel that maybe she said the past few months, I would say over a year since we saw daily and weekly new additions to the USSDN list of names of companies and people in Iran, UAE, China, and Oman. It stopped, and now this resumed this week. So it is a sign of reinforcement. Now, how serious is that? How many more names we see? Is it going to stay at Iranian side, which is less of a concern for the market players, or we'll see some Chinese and Emirati names of companies also added to that list, which would add to the fear and risk and could cut the expanded market of Iranian crude further down to perhaps where it was a year ago. So we have seen 1 million barrels per day or thereabout, certainly over 800 kbd of new Iranian oil over the past year on year added to the market. That could claw back if we see more signs of seriousness. Again, this is all about risk appetite of the buyers, because every one single barrel of Iran has been under sanctions, yet they have been exporting 1, 2, and now 2+ million barrels per day to the market. But that means that
if you intersect that point, I mean, these different points, i.e., keeping Israel's war on Gaza contained to that geography and not spread out to the rest of the region, which has been the big priority of the whole region. And of course, the U.S. administration would appear, at least on the surface, that is their desire. It seems an odd time to constrain Iran when you want their cooperation. Do you see those two things as interconnected, or they're just
No, I don't see, and that's why I say this was a sign. It could have been just a signal for domestic U.S. politics and the campaign pro-Israel and against Iran campaign, and this could have just served that group of domestic politics, and that's why I think it doesn't add up well. We have seen Venezuelan now just India. I heard they just bought the first Venezuelan barrel after 3 years, heading to India for next month. So Venezuela has been increasing and coming back to the market. Iran, Libya, and US, Canada, Brazil, and everyone else. So to cut Iran's back out of the market. I don't think it goes well with the policy, but it serves the other part of the US policy. And hence the efficacy remains to be seen of how many and who is being targeted.
Let's get the survey
Mm-hmm.
question in before bringing Jorge into that particular point. We have a trilemma starting today, which of them will have the biggest impact, relevance for oil markets? The OPEC meeting, the COP meeting, Israel restarts its war, or the end of rate hikes, which is a quadrilemma rather than a trilemma, but nonetheless. Just to grab a hold of that COP word, we decided we'd go with trilemma. But which of these do you think will have the biggest relevance to the oil markets?
You haven't told us the timeline, Sean.
Well, everything's about tomorrow. We don't deal with next year. I mean,
That's true. So that helps answer your question.
We're a daily energy market podcast. We can't be talking about too far into the future here.
And since when we are not allowed to vote, because we used to.
Oh yeah, why can't we vote?
Know.
See what happens? You start talking about Iran, and the next thing you know,
sorry guys, my fault. I started questioning the question.
Zoom has stopped us. That maybe the production team can try and repost that poll because I can't vote either. Jorge, speaking of China, the owners of Zoom. What are your thoughts? I mean, we have a headline in our digest today about the idea that China, which holds the seat of the presidency of the Security Council at the moment, calling for some fundamental sort of structure towards a two-state solution, starting to put their voice forward in this crisis. Because of course, from a physical oil point of view and energy, China is the big actor with sort of consequence here if there was a spread of this war, because they rely so heavily on Gulf energy. Your thoughts on China's role in this current issue of the Middle East?
China can only talk, but it cannot have any concrete action whatsoever. The action that China can do is just work in the background, putting pressure for peace, add me to that, and also to continue to foster the yuan as a medium of exchange. It is very significant that they had a currency swap with Saudi Arabia. It is very significant that Russia continues to use the yuan as a medium of exchange for sales of oil. So while the US has conflicting goals, and they're really colliding at the moment, China will quietly continue to exert a different type of option in terms of payments. And then eventually, this will have more of an impact in markets. But at the moment, it's very small. It's emerging. So what do we see here? And what we have is an overarching desire by the US administration to have low oil prices as we head into the election period. At the same time, it has an immediate need to contain Iran and Hezbollah in the fight between Israel and Hamas. That objective of containing Iran and reducing the exports of oil from Iran are counter to the longer or midterm objective of having low oil prices. And the US, as it goes forward, it also has the conflicting element of keeping interest rates under check, while it tries to keep inflation under check. And therefore, it has to balance out the printing machine. All these things are coming together into a box where the objectives are fully colliding. So what do we see in the immediate future? Well, more printing. The US will have to print. This is positive for the oil market. In the nearest term, China is struggling economically. It's not the star it was. So OPEC has to cut. It should cut if it wants to keep oil prices above 80. And we are going to continue to be outraged by the conditions in the Middle East. That situation could spiral out of control. And I think what we are going to see is a greater Hezbollah activity in the coming days.
Let just pick up on that, Rachel, because I might just differ a little bit from Jorge's view on China, because I would say probably the most significant of prior to Israel's attack on Gaza and the sort of explosion with Hamas in recent weeks was the rapprochement that China curated between Riyadh and Tehran, and most spectacularly physically manifesting in the king, or not the king, Crown Prince of Saudi and the president of Iran holding hands together going into the Islamic conference meeting in Riyadh 2 weekends ago. This is a significant curating that China has done and will continue to have a big influence. Your thoughts, and we have a report in Bloomberg today, Saudi Arabia proposing to invest in Iran if they pull back from their regional proxies.
Yeah, so and I think that story kind of highlights the fact that China clearly had a role, and China maybe saw the winds where they were going in the region and sort of helped get that, you know, sort of initial deal off the line, but that there is interest in the region and from Saudi Arabia first of all neutralizing the risks from Iran, right? The fact that we're in a situation that's a little bit different than, you know, were this conflict materializing a few years ago when maybe there would have been concerns about Saudi infrastructure from Iran proxies. They want to avoid a repeat of Abu Qaib or something like that. So I think, but I think there's a limitation of how far China is going to go to be the sort of guarantor of that dynamic. Now, I differ a little bit from Jorge in sort of how quickly I might sort of read across of things like the use of the renminbi and in energy. I think Russia's using the renminbi because they don't have any other options, right? They're cut off from the dollar, they're cut off from a lot of things, and they don't want these other unconvertible currencies. Yes, it's useful to have a swap line with the Saudis, but that's a small amount of bilateral trade. On the Iran-Saudi trade side, I think investment is still going to be quite difficult in the face of U.S. secondary sanctions, even if some of what's been done so far is window dressing on the energy side. I'd be watching for trade almost more than investment, whether the Saudis government actors can sort of get involved with creating humanitarian and other channels to help buy sort of, you know, basic goods and the like. But, you know, I think this to the extent that they could condition and reduce Iran's support of these regional groups, that would be good for reducing regional risk premia and hopefully good for the people, you know, sort of the people in the region and globally. I just think it might happen a little bit more slowly. But these are sort of different relationships in the region than we would have been talking about a few years ago.
Let's give the last word to Dr. Aman. If you want to comment on that, I'm hearing reports that the Saudis are looking to invest in Iranian gas development because inevitably they have a huge appetite for gas power in Saudi and today, never mind in the next 10 years. Dr. Aman, your thoughts on that, but also in looking, I'd welcome your views on the OPEC decision with China weakness, how much they need to accommodate for that in their decision today. But just start with the possible extension of which this Saudi-Iran rapprochement could go in the immediate term.
Yeah, I'm not too optimist on that. I don't think that will lead to any significant development. That talk could drag, that may end up in some announcements, some MOUs and HOAs and stuff that we have seen previously. I mean, last year or 2 years ago, it was a big Iran-Russia investment thing, and Russian companies, Gazprom came and signed a $50 billion HOA and MOU on gas developments and this and that. There are reasons it didn't happen, and those reasons even more apply to this Saudi investment. I agree with Rachel that small tickets and trade is more likely to be seen. But gas developments and investments, Saudi has big ambitions at home, and there are so much going on. And even if all of those yield, they have even more gas to deal with than they need. But in terms of OPEC, I think if I want to finish what I started, the scenario is the cut that Ho has said is perhaps the likeliest in our three scenario, and 1 million barrels per day, and then that fluff or that uncertainty is around. Okay, then is Saudi gonna roll back the 1 million voluntary, and then their share, how big of that 1 million OPEC plus is? All of that considered, we see trouble coming back to OPEC in second quarter next year. Even if they announce 1 million barrels per day, that may not save them or guarantee the prices from falling below 80 and perhaps towards 75 by second quarter next year. So we'll have to wait and see from today, and then numbers coming in first quarter for China demand and overall demand growth next year.
Yes. Okay. Well, we're going to have to wrap it up there with Brent crude oil trading at 83.41, waiting for Godot, so to speak, as to whether there will be a meeting or an announcement today. We're all in agreement. I think that there's a meeting that's been going on, probably the longest OPEC meeting now for years. That it's at least a week, if not longer, 10 days maybe, that they actually have had the phones ringing. But OPEC is the big one, according to this room, and we'll post that on social. I think it was interesting. I was at the S&P Global Commodity Insights pre-COP forum yesterday here in Dubai, and what slipped just sort of quietly on the side as they were talking about trilemmas and all sorts of things, COP-ish, was that they are now calling the IEA of 2030 for peak oil demand, which was a quite interesting declaration from them, that is now S&P Global's base case. So I think that's something to think about. Jorge, thank you so much as always. If we don't see you, talk to you again. Ho, ho, ho.
Thank you so much.
Dr. Aman, ho, ho, ho to you, and Rachel Ziemba, all the same. We'll miss all three of you, I think, at our podcasters lunch next week here in Dubai, but we will have our podcasters lunch in IE week in London, where we hope to all get together again, if not before. So all the best, everybody. Happy holidays. Thank you.
Thank you so much.
All the best. Thanks very much. Good to see you all. Happy trading.
Thank you.